Good morning everybody, this is Lara with your daily analysis for Bitcoin, Ethereum and XRP, and as you can hear my voice is still not quite right, so this is going to be quick because I just keep coughing and it hurts. At the daily time frame, Bitcoin is just continuing on up. I think that this may have been the test of support on the 12th of March, a lower wick to test support at 68,800. And now I'll expect a move up and away, an increase in volume and momentum is most likely. The moving average situation is full ball bullish. The short is above the mid, which is above the long. They all have positive slopes and price is above all three. This is a full ball bullish look. For the short term, there's a little bit of a decline in volume, although the session here, this upward session for the 11th of March was stronger than this session here for the 6th of March. So for the short term, a little increase, but a decline from the 5th of March. ADX tells us there is still an upward trend, which is very extreme, but not as extreme as it can get when this market has a strong bullish run. In fact, this is actually more the look of ADX toward the beginning and to middle of a bullish run. It can get very extreme indeed. There's a pivot here on RSI, but I'm not going to count this bearish divergence from here to here because there's not a decent pivot on price. Money flow is again overbought, but this can get deeply overbought and remain there for a while when this market has a bullish run. ATR continues to show an increase in range as price moves higher. Volatility continues to return to this market. This is a feature of a market that is in an exponential growth phase or forming a parabolic growth curve. You should see an increase in volatility toward the middle and an explosion at the end, and that's what I'm expecting coming up for Bitcoin. I expect this bull run for Bitcoin is going to continue now for another 5 to 11 months, because when I look at previous breakouts to new all-time highs on its monthly time frame, it continues higher and the bull run eventually ends 5 to 11 months after the breakout. Someone made a comment to me on Twitter that I should not be using log scale for my Elliott Wave counts for these cryptos, and I want to show you why I do. I think it's important to understand what scale you should use for your charts, arithmetic or logarithmic. My contention, and I'll show you why, is that any crypto chart, because of the incredible volatility, you should be using log scale for all of your charts. This is why. This is Ethereum, my Elliott Wave count on the monthly time frame. I'm not going to go through the Elliott Wave count. If you want to screenshot this, do so to have a look at all of my numbers and then test it all with your own calculations. Just remember though, the data from different data feeds will be slightly different. I'm using crypto compare data here. This is a log scale. This is an arithmetic scale. If you view this on an arithmetic scale, you're not going to see any of the subdivisions within cycle 1, and you're not going to see any of the subdivisions within primary 1. This so far, because it's so much newer, you can see the subdivisions for the early stage of primary 3, but the rest of it, you're just not going to be able to do an Elliott Wave count with this data on an arithmetic scale. But when you switch it to a log scale, now you can see the subdivisions, and now you can do an Elliott Wave count. We're going to look at this movement here on the weekly, so this low, the end of primary 2. This is a log scale. You can see the subdivisions pretty clearly. You can do a decent Elliott Wave count with this. But when we switch to an arithmetic scale, it's getting difficult. You can do it, but it's not as clear as when you look at it on a log scale. Back to the log scale, see how clearer these subdivisions are. Let's go to the daily. The high of minute 1 here, this point here. Now we're looking potentially at the middle of minor 3. Could have passed for Ethereum, but this is on a log scale. Let's just pull this down here. Let's have a look at it on an arithmetic scale. So you can see the subdivisions, but it's getting more difficult in this early phase here of this exponential growth or potentially a parabolic growth curve. If it starts to move vertical, then yeah, we'd have a parabolic growth curve. It's not as easy to see these subdivisions either, but when you switch to a log scale, it just gets so much clearer. So even down to the daily time frame, it's my contention that in order to do a decent Elliott Wave count, you need to see the subdivisions clearly. So you need to view a chart with volatility as high as this on a log scale. Technicals for Ethereum on the daily, still expecting resistance about 4,200. Yesterday's candlestick completes with a bullish long lower wick. This could be a hanging man, but the bullish implications of a lower wick on a hanging man mean that you need to have bearish confirmation in the following candlestick in order to read the hanging man as a bearish reversal pattern. Basically, that means a hanging man is a 2 candlestick pattern. The hanging man has to be followed by a bearish candlestick in order for it to be read as bearish. So we need to wait for the current session of Wednesday 13th of March in order to know how we read this. I expect it's probably going to be bullish, and this is just going to be a bullish lower wick. So look for resistance, next resistance about 4,200. If we do see a pullback for support, final support 3580. The moving average situation for Ethereum also is full ball bullish. The short is above the mid, which is above the long. They all have positive slopes, and prices above all three. A little bit of a decline recently from volume. The last completed session for the 11th of March has closed red and has a little bit of a push from volume. Overall, this isn't much of a concern. You can see within a bullish run a little bit of a pause in volume before it continues on higher. That's not a great concern. We've seen it before, particularly in the earlier stages of a bullish run. This is normal behaviour. ADX is declining though. It's telling us there's no clear trend, although price is continuing higher. This is actually good to see ADX decline and move away from very extreme. I'd like to see a consolidation or pullback for Ethereum here to relieve these conditions and set ADX up for an indication of a new trend. We might not get that though. The trend may just continue to reach very extreme. At larger time frames, there is clearly an upward trend from Ethereum. RSI was reached deeply overbought, did not exhibit any bearish divergence. A consolidation or pullback here would be nice to relieve some extreme conditions. We might not get it though. Conditions can remain very extreme while price travels a considerable distance. If you want to see what I mean, have a look at the last big bullish runs for Ethereum with ADX and RSI. See how they behave and see how they get very extreme relatively early on in a bullish run. Money flow is back in neutral. I'm not going to count this as bearish divergence from here to here, because in order for me to do that, we need to see a corresponding decent pivot develop in price, and that just hasn't happened. And ATR continues to show a strong increase as Ethereum moves higher. It's not limping higher, it's moving higher quite strongly. This is an indication of a strong bullish run and not a bear market rally. Let's have a look at what scale to use using XRP as an example. This is the entire price history of XRP on the monthly time frame with my full Elliott Wave count. I'm not going to go through the Elliott Wave count here again. If you want to have a closer look at these numbers, take a screenshot. This is on a log scale, and you can see within cycle 1 you can see these subdivisions really clearly. You can see the subdivisions in cycle 2 and some of the subdivisions in primary 1 and these subdivisions here within an intermediate 1 on a log scale. But when we change to an arithmetic scale, there's just no way you could do an Elliott Wave count of cycle 1 on an arithmetic scale. You just cannot see these subdivisions. You can't see the subdivisions at the end of cycle 2, and the beginning of primary 1 is really difficult as well. It's not as clear also for more recent movement, the start of intermediate wave 1. Even if I extend this up so that my candlesticks are filling the whole of the screen from bottom to top, you still can't see these subdivisions, particularly the start of cycle wave 1. A little bit clearer now for recent movement. You might be able to work with that, but look, let's be honest, you really do need a log scale to do an Elliott Wave count on markets with extreme volatility like this. At the weekly time frame, we're seeing the detail of the start of cycle 3, primary 1, primary 2, the start of primary 3 on a log scale. You can see the subdivisions here, so you can identify what structure fits with all this overlapping, a leading expanding diagonal. But when you switch to an arithmetic scale, you're just not getting that detail, so you're going to have a really hard time figuring this structure here out. Now if I extend my chart so that my candlesticks are filling the chart from bottom to high, it gets a little bit easier. Rule of thumb: charts with extreme volatility should be viewed on a log scale. Charts with much lower volatility, for example euro-dollar, view those on an arithmetic scale. Daily time frame, XRP, still expecting overall upward movement. I'm changing my Elliott Wave count for the short term to see minuet wave 1 incomplete. 1, 2, 3, looks like 4, which may not move into one price territory if it moves any lower. Looks like we need a fifth wave to end another first wave. And for XRP, I'm expecting a series of first and second waves is completing. I don't expect the middle of the third wave as yet here. This is a log scale, and this is an arithmetic scale. You can see the subdivisions. You could do an Elliott Wave count at the daily time frame with just a little bit of more recent data on an arithmetic scale, but it's still going to be so much easier on a log scale. So just use a log scale for all your time frames. Technicals for XRP looks like a backtest of support at 0.675 was pretty successful yesterday. A little bit of an overshoot there, but it's returned to within above the support area. Look for next resistance at 82 cents. That strong upward session has a really good push from volume, and the downward session to follow it, weak volume. Looks like yesterday's session for the 12th of March was just a little pause, just to relieve some extreme conditions after the extreme upward movement for the 11th. It's really good to see strong volume pushing price higher for XRP, and the following session a normal to be expected reaction after the excesses of the previous session. Unbalanced volume has a weak range. I may keep an eye on this. A break above the yellow resistance or purple support lines would give a weak signal. ADX has given us the strongest bullish signal it can give. XRP looks likely to be in a new upward trend in a very, very early stage. This is extremely bullish and beautifully fits the Elliott Wave count. RSI is back in neutral. I'm not going to identify this as a pivot for price because it's only had one, not even really downward session, it's just an inside session, so not a decent enough pivot to try and identify bearish divergence here. Money flow is neutral, no divergence here. ATR continues to show a strong increase. Absolutely fantastic to see both volume and volatility return to the market. That's it for me today. That's all I can manage with my voice the way it is, and I hope everyone is having a lovely day.